Welcome to Centrus Real Assets Spotlight. Today we are joined by Ben Denton, the CEO of Legal & General Affordable Homes, to focus and talk a bit about UK affordable housing sector. Welcome, Ben.
Thank you. It's lovely to be here.
So, shall we start with you telling us a bit about Legal & General Affordable Homes, where you are in the journey, and how do you see it going forward?
Okay. So we set up the business in 2018. We started trading in 2019. And I guess why did Legal & General enter the affordable housing marketplace? Well, I guess three key components. First was there weren't enough affordable homes being delivered. Secondly, we saw that the sector was becoming increasingly highly leveraged and there was the risk of it slowing down in terms of its delivery. And the third was there was a wall, as we were told at the time, of capital that was interested in coming into the affordable housing sector. So that was the start of L&G Affordable Homes. So we have about 4,500 homes in operation, another pipeline of about between 2,500 and 3,000 homes, 140 people in the business, and have affordable housing pretty much across England. I guess we've formed the business on the basis of, three sort of pillars. So the first is how do we deliver really high levels of customer service? Obviously, it's a sector where there are challenges about delivering customer service. So if we can do better and raise the bar, then that's good for our customers, but it's good for the sector generally. So the second thing is how do we bring digital into the sector. So we've built our technology platform from scratch. So that effectively we sort of look to other organisations in the sector that have digitised their services and activities. That doesn't mean we've only got a digital presence with customers. You know, we have different routes to our customers. And then the third is how do we work in partnership with the sector? So working with the existing housing associations and other organisations that already serve the sector. So how can we be a partner to the sector rather than just competing with the sector, if that makes sense?
Excellent. We at Centrus are quite active as advisors to the sector across the spectrum. We have a team of about 20 people focused on delivering corporate finance and investment banking advisory services to the sector. The genesis of that rests in the not-for-profit affordable housing associations. And to date, the for-profit part of that remains quite nascent. How do you see that evolving over the next 2 to 3 years, near term, medium term, and more on a long-term basis?
Yeah, it's a really interesting question because I guess maybe 2 years, so obviously it's been a fairly turbulent few years in the past, so really since 2020 and COVID, and then into 2022 and the sort of financial turmoil there. So it's been interesting because there's about 60 for-profit organisations that are registered at the moment, but there's probably only about 7 to 10 that are really active. Some have scaled up significantly at pace. So thinking about Sage and ourselves and the Gresham House vehicles as well, and M&G, and others have sort of scaled up at a more, a slightly slower pace. I guess the reflection is, the first thing is it's been a really weird marketplace in terms of funding. It's very, very difficult to fund any real assets, as you know, at the moment, or it has been a difficult set of circumstances with real asset prices falling, interest rates going up, risk-free rates going up, and therefore pricing having to adjust. And in that time, funders aren't as active in the marketplace. And certainly that was the case for the end of 2022 and beginning of 2023. I think as we move into 24 and beyond, as interest rates start to come down and long-term investors become more comfortable, there will be a scaling up of institutional funding and activity in this marketplace. With the not-for-profit sector, we've seen M&G have delivered one, and AXA as well with Hyde. You know, we've got a relationship with Metropolitan Thames Valley, and there's been some transactions with CBRE, with a couple of housing associations. So we're seeing those collaborations coming together and delivering more housing. I think as well we may start to see collaborations between other institutions and for-profit organisations. So to what extent can we be a platform for our own funders and other partners that want to get access to the sector. So clearly there is a need to deliver more affordable housing in this sector, and there is a need for more affordable housing funding to flow into the sector to grow the sector. So it will be a growing sector.
We as advisors to the sector, Ben, have seen a wide range of for-profit and for-profit businesses, where at one end, some of the names you mentioned are more scaled and scalable with the right teams and infrastructure in place. And on the other end, some of the more house builders and developers whose core business is not owning houses, but more delivery of houses and moving to the next site, have also looked to find ways to partner with associations and with for-profits. And I think that trend appears one that will continue, and it is a function of, I'm sure you would agree, a function of the market dynamics that have transpired over the last 2 years. I think the interesting thing that we've seen also in the sector is some early stage movers and higher cost of capital, which could benefit at the time with record low rates for 4 decades. Saw this as a social infrastructure asset class and a route to manufacture long-dated inflation-linked income. But that has now changed, as you said, and it's interesting to understand from you what type of capital do you see coming in? There is insurance capital, there is local government pension schemes, but also international sovereign and pension fund capital. Is that something you think would follow?
I think definitely. I think you're absolutely right. The funding has been. I mean, and our business is a good example of this. So we've funded just over £1 billion worth of assets using internal pension fund capital. We're obviously working on bringing in external capital, which is principally through local authority pension schemes. So that's phase 2 of growth, and that's where a lot of our competitors have already been active in the marketplace. So we see that sector will grow over time, but there's only a certain amount of money in that marketplace. When you step back and you say the affordable housing marketplace, to build 50,000 homes a year is £10 billion. Swallowing up £10 billion each year of new capital is a big old marketplace. So we do see, I think, as you're intimating, the next stage of that will be bringing in capital that's looking for slightly higher returns, not massively higher returns, and that sort of capital will those sorts of returns can be delivered by I guess judiciously introducing a little bit of development risk into the growth program, and that's certainly where we'd see some of the overseas pension funds coming into the sector, so that the sector then becomes attractive again from an investor perspective compared to other sectors that they might be thinking about investing in, like other bits of social infrastructure.
No, I think that is a very good point, and I couldn't agree more that with the fixed income markets and more on the liquid side, the yields moving out, the comparison to social infrastructure for the illiquidity that it brings, there is a premium, and rightly so, that the investors demand. I think the other point I would like to make, Ben, is the asset class being defined as social infrastructure or moving into the realms of social infrastructure. As you very well know, allocations for pension funds and institutional investors are bucketed by asset classes. So liquids, you have equities and fixed income, but illiquids, you have real estate, you have infrastructure as a separate asset class. And the beauty of this at Centrus, we fully and entirely believe in, is the longevity of the income and the stable, robust nature of that can be enhanced with positive framework and policy making. And that almost doubles or opens up this whole new allocation to go into this asset class. And in fact, I think one of L&G's views recently has been around affordable housing benefiting from more longer term policy view and frameworks, which gives visibility and predictability of those rents and income.
Yeah.
But very interested to hear your thoughts around affordable housing as social infrastructure and unlocking some of that capital.
Yeah, no, I mean it's a really good point. The risk around which creates more, I guess, wider pricing on affordable housing as a result of policy intervention on rents. Obviously, that means that the asset class moves away from social infrastructure and more towards real estate. And the extent to which we can bring affordable housing back into the social infrastructure envelope is really, really important. So having rolling 10-year rent certainty in relation to in relation to rent settlements is really, really important. So I would hope, I think we're alongside the rest of the sector in saying if we can move to a marketplace where we have 10-year rent settlements and 10-year certainty. It's not about the actual inflation level, it's more around the certainty of inflation levels, and therefore the assets will be, as you say, compared to other infrastructure investments, and the weight of capital in that sector is significantly greater. I think as well the second point is, and we do see this as part of our role of evolving the sector to crowd more investors in, is the more third-party investors there are in the marketplace, the more it becomes an accepted marketplace for people to then have a proportion of their allocation in.
Yes, no, absolutely agree. And I think it also, I'd be very interested in your thoughts on this, Ben. Given it's no secret that the traditional housing associations are under a lot of pressure, whether be it decarbonization spend, fire safety, damp and mold, and condition of the stock. And all those pressures are affecting the ability of the traditional not-for-profit sector to deliver new homes. And I'd be interested in, you mentioned the word partnership and collaboration. Interested in your thoughts on how does Legal and General Affordable Homes see that partnership and collaboration. And maybe we can also touch upon retrofit and decarb, which is a topic in itself.
So two really interesting questions. Let's say the traditional RPs are challenged in the sector from all of the areas that you talked about. There is still massive capacity in the sector in terms of people, skills, experience, knowledge, and an ecosystem to supply and support customers. So anything we can do that crowds additional funding into the marketplace and makes use of those existing skills and resources that exist in the marketplace in the existing players to do more is going to be positive. So we sort of see there so those relationships could be enabled through joint ventures and formal transactions, or they could be just through collaborations. So we do have a couple of collaborative agreements with register providers where we just commit to each other to work together to do specific transactions which deliver our business plan aims and the provider's business plan aims, and we might work together contractually to do that. I think when we try and form joint ventures, it is quite complicated. I mean, we do see a massive link between the health and well-being of the nation and customers that live in affordable housing, and the need to retrofit homes and make them warmer and safer to live in to drive better health outcomes for customers. Clearly, the policy environment is not enabling of landlords investing in their stock to reduce the energy costs for customers. So for any government, that's a real challenge going forwards. How can we change the edge between energy costs or energy investment and costs and landlord and tenant investment and costs and bring them together so that we can create an environment where landlords are incentivised to invest in their homes for the benefit of customers. We're really, really interested in that area. We have across L&G a number of investments in the clean energy sector, and we're super interested in figuring out what solutions could look like in that marketplace. So for us at the moment, that's an area of discovery and conversation, rather than an area that we've sort of opened the doors and ploughing lots of money into transactions in that space.
Excellent. No, it's great to hear that it's up on the agenda and following through. And I think a business like L&G that has got all the various facets, including investments in clean tech, renewable energy, and also affordable housing, and bringing that together in a single house and a single solution could be incredibly valuable for the UK economy and the UK households. Excellent. So Ben, if you had a message for the sector, for the affordable housing sector, what would that be?
Wow, that's a challenging one. I guess my reflection is, as a sector, and we are part of the sector, we're at a sort of seminal moment, particularly in relation to customer service and the customer's confidence in all of the sector, us as landlords. I think it's really important that we as a sector think about, getting back out there to talk about the what that we're trying to achieve together, the better society, the fairer society that we are seeking to deliver. The challenge at the moment is the narrative is absolutely correct, which is on driving better customer service. Customer service is not great in the sector, and there's problems associated with damp and mould, as you've said. But we need to get back into projecting the why. Why are we here? Why are we seeking to build a fairer, more inclusive society through providing housing that people can afford? It's really, really important that we get that message out there. So I think as long as institutions are talking about that message alongside the traditional players in the marketplace, hopefully people will start to understand why we are participating in this marketplace and the good we're seeking to deliver.
Excellent. That's a very, very important message. And Ben, you'd be pleased to know it resonates fully with Centrus and what we are trying to achieve with our focus on affordable housing, social infrastructure, and real assets generally. Thank you for joining us today, Ben. It's been a pleasure to have you and have your insights on the affordable housing sector. Thank you very much.
Brilliant. Thank you, Omer.